Imagine there are two neighboring cities. In Green Valley, everyone is a buyer. Shops are full, people are laughing, and the value of every house rises every single day. This is the bull market. But just across the mountain lies Shadow Forest. Here, people are afraid to spend. The streets are quiet, and everyone's trying to sell their houses before the price drops even further. This is the bear market. Most investors get rich in Green Valley, but the smartest investors prepare in Shadow Forest. Today, we're going to walk through both worlds, so you never get lost in the market again. Why is it called a bull market? Think about how a bull attacks. It thrusts its horns up into the air. That's exactly what happens to stock prices here. A bull market is officially defined when stock prices rise by 20% or more from their recent lows. The atmosphere, confidence is at an all-time high, your neighbors making money, your taxi drivers talking about stocks, and the news is full of success stories. The economy, usually unemployment is low and the GDP, or gross domestic product, is growing. The trap. Because everything looks easy, people start taking too much risk. They buy junk stocks thinking they'll go up forever. When the party in Green Valley ends, the bear wakes up. A bear attacks by swiping its paws down. We enter a bear market when prices drop by 20% from their recent highs. The atmosphere, fear takes over. The same people who were bragging about profits are now panic selling. The news is full of market crash headlines. The reality, bear markets are shorter than bull markets. On average, a bull market lasts about 4 to 5 years, while a bear market often only lasts 10 to 18 months. The opportunity. For a long-term investor, the bear market is like a clearance sale at your favorite mall. Stocks of great companies are selling at 30% or 50% discounts. Not every dip is a bear market. A correction. This is a drop of 10%. It's like a healthy refuel stop during a long road trip. It happens often and keeps the market from getting too overheated. A crash is a sudden double-digit drop in a very short time, days or weeks, usually caused by a major event like a pandemic or a bank failure. Knowing the difference helps you stay calm when the red numbers appear on your screen. Here's the golden rule. Bull markets make you feel good, but bear markets make you rich. If you only invest when the sun is shining in Green Valley, you're buying at the highest prices. If you have the courage to stay invested when the bear is roaming Shadow Forest, you're setting yourself up for generational wealth. The market is a cycle. It breathes in, bull, and it breathes out, bear. Your job isn't to time the cycle, it's to survive it. Are we currently in a bull or a bear? Look at your portfolio and tell me the mood in the comments. Don't forget to subscribe for more stories that make finance simple. See you in the next one.